morning traders, this is your host Chandrakant Sharma from Night Fintech and you are listening to Night Snippets. Let's discuss the economic news which happened this week and will impact and decide the future course of action. This week, the Chinese industrial production data was released. China's industrial production expanded by 5.6% year-on-year in April 2023, but the market was expecting it to increase by 10.9%. In United Kingdom, the number of unemployed people receiving unemployment benefits increased to 46.7 thousand in April from 26.5 thousand in March. This indicates the slowing UK job requirement by the industries. In Eurozone, the CPI numbers are still high. The CPI for the month of April printed as 7% as compared to 6.9% during March. However, it has come down from the 10% level of last year end. In Japan, the GDP increased year-on-year by 1.6% in Q1 as compared to year-on-year decrease of 0.1% in Q4, indicating recovery and strong Japanese economy. As discussed last week, the negative news regarding the risk of a US default rate due to debt ceiling started haunting the market. For the whole week, the yield continued to climb upside. The 10-year US Treasury yield closed the week at 3.678% as compared to previous close of 3.47%. On Thursday, the last Fed President Lori Logan added fuel to soaring yields by saying that the current economic data does not justify a pause in interest rate hikes. However, on Friday, Fed Chair Jerome Powell said that interest rates may not have to rise as much as previously expected given the turmoil in the banking sector. Night Insights: the problem of US debt ceiling is not yet over. However, as we know that if a deal is not done, it may lead to significant GDP decline and job losses which will cause turmoil in bond and stock markets worldwide. We expect the mixed comments from Fed members shall keep the 10-year yield near 3.55% level during upcoming week. Regarding crude oil market, friends, Brent oil continued to trade within $73.80 and $77.80 band during the week. Oil prices kept pressured down due to concerns on fuel demand at top global oil consumers US and China. However, news regarding tightening supplies due to OPEC plus cuts and a resumption in US buying for reserves balanced the price. Oil prices got support by US plan to purchase oil for the strategic petroleum reserve, while raising wildfires in Canada raised supply worries. For the upcoming week, we expect Brent to remain in range of $72 to $79 till some major event. On currency front, as discussed last week, dollar index has formed a strong base for almost 2 months and moved out of consolidation and continued its momentum. As anticipated, it moved close to 103.70 level. For upcoming week, we expect dollar index to trade in 102.50 to 104.50 range, tracking progress in US debt ceiling issue. USD INR closed week at 82.67. As anticipated last week, adverse global situation forced it down towards 82.80 level. For the week, we expect the rate to remain in 82.40 to 83 level. However, wild movements due to resolution of US debt problem cannot be denied. Now coming to the domestic debt market, the benchmark 7.26 2033 bond yield closed at 7.01%. The lower CPI numbers kept yields down during whole week. However, US Treasury yields kept impacting domestic debt market. On Friday, yields moved 4 basis points higher after the RBI announced its surplus transfer to the government for Rupees 874 billion, which was lower than the market expectations. The 1-year swap rate settled at 6.56 and 5-year overnight index swap rate ended at 5.97%. Night Insights: as expected in last week's Night Insights, the lower CPI brought celebration, but rise in US yields kept haunting domestic bond market. The domestic market is comfortable near 7% yield. The yields tried to breach 10-day exponential moving average but could not close above it. However, a major trend line at 6.97% level is keeping yields up. Any close below trend line will continue major downtrend. For upcoming week, we expect 10-year yield to trade in 6.96 to 7.06% range depending on movement in US yields due to debt ceiling issue. That's it for the week. See you next week with the new episode from Night Snippets.